Welcome back, everybody, for another deep dive. Today, we are going to be looking at the data analytics company, Palantir Technologies. Now, specifically for this deep dive, we're going to be looking at their balance sheet, so kind of look at their overall financial health. And just from taking a quick glance at some of their recent filings from TradingView Macro Trends, tip ranks, simply don't state one number, really jumps out at me.
Oh, yeah, for sure.
And that is that Palantir is sitting on a mountain of cash. We're talking about $4.565 billion in cash and short-term investments. So that is a truly impressive war chest. But what does that kind of financial firepower mean for their future, especially in a market as volatile as this one?
Well, I think it's a good sign. It means that they have a lot of flexibility. If they need to invest more in research and development, make a strategic acquisition, or simply ride out any economic storms that may be brewing, it really acts as a cushion and a safety net and a potential springboard for growth. So I think overall it's a good sign.
Okay, I'm seeing the appeal, but I have to ask, isn't there a flip side to this? Holding on to that much cash, couldn't that be seen as overly cautious? Maybe even a missed opportunity to invest more aggressively?
Yeah, I think that's a good question, and it's something that a lot of investors are grappling with. You see, while a cash pile like that does point to stability, it also could point to a very conservative approach. And there's always that possibility that they are missing out on opportunities to leverage debt for quicker growth.
So it's a bit of a trade-off then, security versus the potential for rapid expansion.
Exactly. And I think to really understand where Palantir is headed, we need to look beyond just that one number. Let's dive into some of the other key metrics on their balance sheet and see what they reveal. One thing that stands out to me is that they have zero long-term debt.
No debt at all. That seems almost unheard of these days.
It's a deliberate choice, and it really speaks volumes about their financial strategy. By avoiding debt, they're minimizing risk, they're keeping their interest expenses low. It's like they're building this financial fortress, making them less vulnerable to any market fluctuations.
Interesting. So they're playing it safe, which I guess makes sense given the current economic climate. But what about their growth potential? Could this fortress approach be holding them back in the long run?
That's a good question. Some analysts will say that they're missing out on opportunities to use debt strategically. Like imagine if they used borrowed funds to acquire a promising startup or invest in a groundbreaking new technology that could potentially accelerate their growth significantly.
Okay, so there's two sides to this coin. On the one hand, the cash and the lack of debt do provide a solid foundation and financial security. But on the other hand, are they being too cautious? Are they missing out on potential opportunities to really push the boundaries in the data analytics world? I guess what we really need to understand is how effectively they're using their resources to generate revenue and ultimately profits.
Absolutely. And to get a better understanding of that, we need to shift our focus from the snapshot provided by the balance sheet to the dynamic picture that is painted by the income statement. It's there that we'll really be able to see if this fortress is generating any real treasure.
All right, let's shift gears then and delve into the world of Palantir's income statement. This is where we'll see how that massive cash pile is actually being put to work. Okay, so we've established that Palantir has a truly impressive war chest. But the question on everyone's mind is, are they putting that money to work effectively? Let's dive into their income statement and see what kind of picture it paints.
Yeah, the income statement, it gives us a different lens through which to view a company's financial health. The balance sheet we talked about, it offers a snapshot in time, but the income statement reveals the flow of revenue and expenses over a specific period.
So less of a still life and more of a motion picture.
Exactly. And when we look at Palantir's income statement, one thing becomes clear: they are in a growth phase. Their revenue has been climbing steadily, but consistent profitability remains somewhat elusive. In fact, their most recent quarter actually showed a net loss.
So they're spending, but not yet consistently making. That seems like a bit of a tightrope walk, especially with all that cash sitting in the bank.
It is a delicate balance. You see, for a company like Palantir, which operates in a cutting-edge field like data analytics, investing heavily in R&D, is crucial for staying ahead of the curve. They're pouring resources into developing new technologies, expanding their capabilities, and those efforts don't always translate into immediate profits.
I see how that makes sense. It's like they're building the infrastructure for future success, even if it means taking a short-term hit on the bottom line. But again, this raises the question about their strategy. Some might argue that with their financial strength, they could be pushing for even faster growth.
Yeah, there's always this kind of debate about how aggressively a company should pursue growth. Some investors might prefer a more measured approach, focusing on sustainable profitability over rapid expansion. Others might argue that with Palantir's resources, they should be making bolder moves, perhaps acquiring competitors or branching into new markets.
So which camp is right? Is it better to play it safe and build a solid foundation, or to take bigger risks for the chance of greater rewards?
Well, there's no one-size-fits-all answer. It really depends on a multitude of factors, including the industry landscape, competitive pressures, and the company's long-term vision. What we need to consider is whether Palantir's investments are truly setting them up for dominance in the future, or if they're playing it too safe in a rapidly evolving market.
It sounds like we need to look beyond the numbers themselves and really understand the story they're telling about Palantir's strategy and its potential for success.
Absolutely. And one crucial piece of that story is revealed in the statement of cash flows, which tracks the actual movement of cash both in and out of the company. It's like looking under the hood to see how efficiently the engine is running.
Okay, let's pop that hood and see what we find in Palantir's cash flow statement.
Yeah.
This is where we'll see how effectively they're converting their assets and investments into actual cash flow. I have a feeling this will give us an even clearer picture of their financial health and growth potential. So we've explored Palantir's fortress balance sheet, and we've taken a close look at their income statement, which seems to be evolving. Now it's time to pop open the hood, as we said, and examine their statement of cash flows. What can we learn from this particular financial document? And how does it contribute to our understanding of Palantir's overall story?
Well, like we were saying before, the statement of cash flows, it really gives us a unique perspective. It's less about a static picture of their assets and liabilities, and more about this dynamic flow of money, in and out of the company.
So it's a way to really see how they're using their resources and whether their core operations are actually generating enough cash to support their ambitious goals.
Exactly. And when we analyze Palantir's statement of cash flows, some really interesting insights emerge. For one, their operations are generating positive cash flow, which is a healthy sign. This basically means that their core business activities are bringing in more cash than they are spending.
Okay, that's encouraging to hear. It suggests that they're not solely reliant on external funding or their large cash reserves to keep things running. But we've also talked about their, significant investments in research and development. Are those efforts putting a strain on their cash flow?
Yeah, that's a good question, and it's something to keep an eye on. So while they are generating positive cash flow from their operations, they are also investing heavily in growth, and this is reflected in their cash flow from investing activities. Now, this is a very common pattern for companies that are in a growth phase, especially those that are operating, in such a rapidly evolving technological landscape.
So they're striking a balance then between generating cash from their existing operations and reinvesting a significant portion of those funds back into the company to fuel future growth. That makes sense, but it also highlights the importance of those investments actually paying off in the long run.
I think that's a great point. And, that's why it's so crucial to consider all three of these financial statements together. The balance sheet provides that snapshot of their financial position. The income statement tracks their profitability. And then the statement of cash flows reveals how effectively they're managing their cash. Each statement, it tells a part of the story, and it's only when we combine them that we get that comprehensive view of Palantir's financial health and future prospects.
Yeah, it's like assembling a jigsaw puzzle, isn't it? Each piece, each financial statement contributes to the bigger picture. Yeah. So what does the completed puzzle tell us about Palantir's journey?
Well, Palantir is undoubtedly a company with a lot of potential. They have that solid financial foundation, innovative technology, and a growing customer base. But they also face challenges like intense competition, a complex regulatory landscape, and the constant need to innovate and evolve just to stay ahead of the curve.
It sounds like a high-stakes game with the potential for, both significant rewards and inherent risks. If you had to kind of distill a key takeaway for someone considering investing in Palantir, what would it be?
Well, I think the key takeaway is that Palantir is at a crossroads. They possess the tools and the resources to really become a leader in this data analytics space, but their success hinges on their ability to execute their strategy effectively and translate their investments into sustainable long-term growth. Now, it's a story that's still being written.
So as always, it's essential to do your homework, analyze the available data, and form your own conclusions. The future of Palantir is far from certain, but it's certainly a journey worth following. Thanks for joining us on this deep dive into Palantir's financial landscape. Until next time, keep exploring.